Recession. Just hearing that word might bring to mind images of plummeting graphs, alarming headlines, fear, unemployment, and even bankruptcy. Yes, it's all as serious as it sounds. During a recession, we see stock markets tumble, real estate values drop, businesses fail, and jobs disappear. It seems like no one is spared, or is that really the case? But if recessions are purely disastrous, why would Warren Buffett, one of the richest people on the planet, admit he looks forward to seeing more recessions? Why did investors claim the best time for growth is during these economic downturns? It turns out, while some see recessions as periods of chaos, others view recessions as golden opportunities. Have you ever wondered why? If you're curious about how some manage to not only survive but thrive during these times, and how you can too, then stick around. This video explains how recessions have surprisingly created more millionaires than even the lottery. By the end of this video, you'll have the know-how to leverage the next inevitable recession to your advantage. And here's a quick tip: the younger you are, the more crucial this information is for you. So, let's get started. Market dynamics, booms and busts. So, booming markets, are they good or bad? Most will quickly say they're fantastic. Stock values soar, asset prices climb, and it all seems great for the economy. But what about those who don't own stocks but want to start investing? For them, rising prices mean it's tougher and more expensive to get into the market. Now, let's turn the tables. What happens when markets crash? It's easy to hear that it's all doom and gloom. People see their investments shrink, companies lose value, and the economy suffers as people cut back on spending. This can lead to bankruptcies and job losses. But there's another side to this coin. Market crashes can open up incredible opportunities. Think about the 2008 real estate collapse. While it spelled disaster for many, it also allowed savvy investors to buy properties at incredibly low prices. Or consider the 2020 pandemic. Yes, the stock market took a hit, but it also meant that shares were available at discount prices, setting the stage for significant gains as the market recovered. In both cases, those who saw beyond the immediate chaos capitalized big time. If you're watching this and thinking about how you can be one of those who benefits from a market downturn, you're in the right place. Let's dive deeper into how you can turn these seemingly bad situations to your advantage. Understanding recession basics. When we talk about the health of a country's economy, we often refer to its GDP. A rising GDP generally signals good economic health, while a falling GDP indicates trouble, potentially even a recession if the decline continues over several months. But what exactly causes a recession? The truth is, it's complex. With so many interplaying factors, pinning down a single cause is nearly impossible. This leads us to a vital rule in economics: no one can predict the market with complete certainty. Feeling a bit anxious about that? It's understandable. But here's a key piece of advice if you aim to profit during a recession: stay calm. Despite the alarming headlines, market downturns are not the end of the world. Investment legends like Warren Buffett rely on one sure thing: the market will bounce back. Most people won't talk about this openly because it's uncomfortable and can be upsetting. The economic system is inherently designed with winners and losers. To seize opportunities during a downturn, you must detach from emotions and focus on strategic decisions. Remember this, especially when times are good. The economy might be booming now, but markets are cyclical. They will eventually face downturns. It's inevitable, not immediately predictable, but a certainty over time. When this happens, many panic, selling off assets like homes and stocks at reduced values. So here are 3 rules to guide you understand the cycles. Don't panic, and look for opportunities when others are retreating. These strategies can help you turn a market crash into a chance for significant financial gains. Preparing for economic downturns. In order to thrive in this economic system, to take care of yourself, your family, and your community, you need to first understand the system itself. It's crucial to recognize that whenever there's disruption, there's opportunity. Figure out how to spot these opportunities. So, what should you be doing right now? It's time to sharpen your skills and gather your resources. When others are getting greedy, that's your cue to prepare. The first step is to change your spending habits. Unlike everyone else, start saving, accumulate capital, steer clear of debt, and boost your credit score. When the crash comes, you want to be the one with resources, ready to seize low interest rates and investment opportunities that arise during recessions. Imagine being surrounded by gold but without the tools to mine it. Don't let that be you. Investing in recessions. Panic, overselling, opportunity, and profit cycle has repeated itself throughout history. Take the 2020 pandemic. A widespread panic led to a massive sell-off in the markets. But for those who were prepared, this overselling turned into a golden opportunity to buy low and eventually sell high, reaping profits. Recessions have profound impacts, especially as economic pressures mount. The bigger the crash, the harder the impact. Many will lose their jobs, and those who manage to hold on to theirs might see their income slashed. But not for you. You've prepared, remember. While others are caught in the frenzy of selling, you see a landscape rich with opportunity. So, what should you be doing in these times of economic turmoil? Invest. Yes, it sounds counterintuitive to pour money into a collapsing economy. But you understand something crucial. The market will rebound. Here's the simplest yet most effective investment strategy: buy low, sell high. Real estate in recession. Take real estate, for instance. The urgency to sell a home increases dramatically. These motivations often lead to lower home prices. With more people desperate to sell and fewer buyers on the market, property values drop. This scenario creates a buyer's market where real estate can be snapped up at a discount. As others pull back, your preparation pays off. With a solid stash of capital and a robust credit score, banks are more likely to grant you loans to buy property. Making money through stock market. Still not convinced there's money to be made? Look at the stock market. Like real estate, stock prices plummet as people lose confidence and pull their investments. But for the informed and prepared, this is another golden opportunity to buy low. One of the biggest drivers in the stock market are emotions. During a recession, fear takes over. But what if you knew something they didn't? What if you understood that the market always bounces back? That's your cue to start bargain hunting. Because in a recession, everything is on sale. Take the S&P 500 as an example. This index plunged 35% during the 2008 financial crisis. Yet those who invested during that downturn saw their investments quadruple by now, as the index has reached its highest levels ever. And there you have it. The last major market crash in the US was incredibly profitable for those who were prepared. While you can't predict the exact timing of the next crash, it's guaranteed to come eventually. Markets generally trend upwards over time. So the longer your investments stay in, the more likely you are to see substantial gains. This is especially true for younger investors. The earlier you start, the better. Thank you so much for watching. Your support is incredibly valuable to us. Please show your support by liking, subscribing, and hitting the notification bell. Share this video and engage with us in the comments below.